We've for some time expected weak growth. I think we're beginning to see that in the data. But I think it's really on the inflation side where there's been a significant shift over the last few weeks. So the incoming data on wages, for example, has softened more than expected. We've now seen that the euro has appreciated strongly, which has surprised many. Energy prices are lower. And then also quite importantly, we think the big tariffs on China are likely to imply a significant amount of trade diversion of goods towards Europe. And so overall, we expect this to be disinflationary for Europe. We've lowered our inflation forecast. We now expect core inflation of 1.7% by the end of next year. But of course, it still depends on a number of things. And so I would say the ECB discussion is still a little bit more open, even though I would note over the last few days, there have been more indications of ECB speakers kind of noting that the disinflationary forces ultimately might be the bigger ones here.
What could change that outlook? What could prevent inflation from falling and these negative forces taking a dominant role here? Where could you be wrong?
Yeah, I think really three things. One is the exchange rate. So if the euro suddenly were to depreciate strongly, then this could have significant inflationary concerns. I think most people that worry about inflation related to tariffs really have that exchange rate channel in mind. But of course, it has done exactly the opposite, and we actually expect the euro to strengthen more to 120 over the next year. But this is one channel clearly. The second channel is related to retaliation. So if the EU were to retaliate by putting up tariffs against the US or even third countries, then of course that would have some mechanical inflationary effect. But so far it looks like the EU is going to be fairly cautious here around the retaliation. So we don't see this as a concern for broad-based inflation pressure. And then the last one is a more sort of medium-term concern, but it's really around fragmentation of supply chains, that kind of global costs and input costs could rise and lead to inflation over time. I think it's much too early to say on that third channel, but when we put all that together, we think it's going to be disinflationary, and we think it will reinforce the need for the ECB to keep on lowering interest rates.